morning, Alex. Good to see you again. We're going to talk about patterns. We're going to talk about advantages, guys. I'm going to lean on management a little bit today, I think. I see a lot of people posting things, and I see manages and working on management plans. Hey, Mike, good to see you. And I'm just going to address it a little bit today. I'm going to give you my 2 cents. I'm going to give you some stuff to think about as you develop your management plan. But I'm going to stress first that, guys, great entries create very manageable trades. Amazing entries create manageable trades. Good morning, Miss Jen. Well, you know, great minds think alike, right? I saw you with the 4 lot there. Nice job. So guys, we're going to talk about a couple different things. I've created a new management PowerPoint. We're going to delve into it on NinjaTrader a little more, guys, and I really want you to be vocal and let me know where your head's at. This is one of those days where I'm going to rely on you guys for feedback. Help me build this into something solid for not only you but future users. Today is October 1st. Holy smokes, where is this year going? And at 8:15, guys, there was a big spike in the market. I don't know if you were watching, but man, if you were in a long trade, it knocked you out, and there was the perfect long trade right before news. Sorry, Paul W. And there's 2 types of people in this world, guys. There's the people that have never traded in the news and lost a trade because it spiked the other way, and there are the people that have. I guess I should say they're the people that have and the people that will. Guys, everybody does it. I've done it. I blew out an account on FOMC once because I forgot about it. Pete, you were long. You got out right before news. Good job. But we know when those spikes are coming. We know when they're possible because of forexfactory.com/calendar. So our next one is 10 a.m., guys. Big red box says, hey, be aware, know what's going on, don't do silly stuff, right? Sidestep that emotion. And then at 10:30 a.m. for you crude oil traders, I still have a lot of you in here, crude oil inventories come out. And there's 2 things that I like to say about crude oil inventories. Guys, I don't trade what they say. I refuse to. I trade the patterns that have been defined and provide an advantage for me. But crude oil inventories, one of the personality flaws is as they get closer to that release of the barrels, you'll find that the people in charge start jockeying for position, and follow through becomes a little difficult. Or maybe it just becomes range bound as they wait. So be aware, crude oil traders, as you get closer to that release, make sure that you're following your plans. And then what we're going to do this morning, guys, and I changed my PowerPoint a little bit, tried to streamline it, tried to go through, but I'm going to share this picture first. Boom, boom, boom. There are 2 platforms that I discuss every day. So, whoops. You are either one of my NinjaTrader users, which is great. NinjaTrader, guys, we've been teaching on this one for a long time. We have a proven plan designed to optimize your chances of success. Or I've got TradingView people. And TradingView is 100 million users strong, and it's a very stable platform. And I'm going to hand you a plan designed to optimize your chances of success. So it doesn't matter to me which platform you're on, guys. I'm going to give you the education for both. I'm going to make sure that you can recognize some advantages. We're going to give you a plan. My morning is the same every day. We're going to learn the trigger line and the Fibonacci rules for both platforms, just in one big long-winded sentence. And we're going to learn them for when it's okay to trade, guys. And when I say for when it's okay to trade, what I'm saying to you is when your rules are met. Because the one thing that I know for certain every time I take a trade is that I have an edge, that I have an advantage, that I have a very clearly defined checklist for entry that lets me know that I'm on the good side of things. So we're going to talk about those for both platforms. I want you guys to practice, especially if you're brand new. A lot of times I hear new users say, well, when I get this down, I'll start simulating. Guys, don't. Get in the kitchen, break some eggs, simulate, practice, make mistakes. But the first step in getting to where you want to be is show me your trades, guys. If you're on NinjaTrader, show me your trades and tell me what you saw on your chart and tell me how you read your indicators. If you're on TradingView, guys, do the same thing. Tell me the things that inspired you to get into that trade. Because chart reads are what we're focused on first. And guys, I will keep it simple. I encourage you to do the same. I am very, very right-brained. I love patterns, and I'm not very technical, guys. And even someone like me can do great things with this software by keeping it simple and keeping it focused and not overthinking. So I'm going to hand you a plan for both sides, whether you are our NinjaTrader or whether you are TradingView, guys, and they are both dubbed the KISS plan. And in these KISS plans, this happens to be the TradingView. These plans will be stepping stones in your learning journey. They are designed to teach you how to read your indicators. And these trades that are on these plans are designed to optimize your chances of success. I love that word, optimize your chances of success. So as a brand new user, I'm going to put in your lap the highest probability trades you could ever take, the trades that give you the highest chance of success. And then through study, simulation, class feedback, and practice, you're going to write a plan that suits your needs, guys. You're going to step out of the very basic probably. You're going to use your chart reading to enter differently, to manage differently. But you've got to learn the looks so they become easy. And that's where the second piece of the puzzle comes in, guys. I'm going to give you a spreadsheet. If you are on NinjaTrader, your spreadsheet covers the rules. There's over 500 client trades. There's a place to build your plan. There's even a tracking sheet. Eventually, we're probably going to trade this out with Victor's tracking sheet that is amazing that he built, but I got to get a little time in the saddle with it first. If you're on TradingView, it's the same thing. I've got the core looks, a place for you to put your study materials, what it looks like when rules are met, a couple ideas on management, termination conditions, and then the final page on both is trade tracking sheets, guys. And the trade tracking sheets are where you're going to take those pictures that you posted in the room. You're going to drop them in that tracking sheet. You're going to talk about what you saw. And you're going to write some notes on the feedback you got from class, because every time you post in my room, guys, you get a private session. Every time you post in my room, we're going to talk about advantages. Every time you post in my room, we're going to make sure that you read your charts, your indicators correctly. And really, I'm going to take every ounce of experience that I have and pour it into your review to see if there's something that you can do better. So what I ask is, when you post in my room, tell me why you did what you did. Tell me what you were thinking, what you were doing. And if I look at your chart and I say, hey, you told me that you had strong triggers, but they were really weak, brace yourself. There's a lesson on momentum coming. Or, hey, you traded into a termination condition when your higher probability of success comes from letting it clear. Guys, put your big boy girl and pants on, because criticism is a part, feedback is a part of the educational process. But the cool thing is that I'm really nice about it. And I won't just tell you that you did it wrong. I'll tell you how to fix whatever you did wrong, because the cool thing about me teaching this class is I have done everything wrong. Most of it hundreds of times, and I finally figured out how to fix it. So this class is the shortened path to success. It's missing all of the hurdles and roadblocks that I had to take on my path. So post in the room, lots. Tell me why, guys. Your posting is asking for feedback. If you want to show off, show off. I love it. Show me your winners. I even make highlight reels of it. But remember, let's get feedback and be ready to accept that feedback. And if you don't want it, don't like to hear it, guys, maybe don't post in the room. I've had a couple people quit because I gave them feedback. True story. And then use that spreadsheet, guys. Fill it out. Take a lot of pictures. The people that take the most pictures typically get to where they want to be the fastest. This is where I do the, hey, look at my picture count, guys. I take probably 50 pictures a day. I am at 8,589 pictures for this year so far, so we're 10 months in. And it was October 2024 that I started this particular Snagit subscription. So in the last year, I'm at 16,000 pictures, guys. That's a lot of pictures. Um, and that's why the charts seem to move slower, and they will for you too. So I'm going to go through it. We're going to talk about two trades, guys. And the whole goal that's behind everything that I do is to teach you to read your charts, to teach you to read your indicators, to look at your charts and recognize a couple core advantages that you're going to use to enter a trade. I'm going to start with NinjaTrader. So on NinjaTrader, remember, NinjaTrader is not TradingView. It's a different bar structure, it's different time frames, and it will be different rules, guys. So know which one that you're on. This is the rules for what we call a high probability trade. And a high probability trade means that each indicator on every chart agrees with the rules for the trade, guys. This is the best of the best. This is your first trade. This is your core trade, because this is the trade that's going to teach you to recognize advantages so you can turn those advantages into more opportunity. Each rule, let's get my laser pointer on here. Pew, pew. Each rule, when true, creates an advantage, recognizes an advantage, defines an advantage. The advantage is momentum, clear path, and entry. That's your recipe for a trade. There is a process that creates results, guys. And the process is having all three advantages in play so that you can take a trade that typically wins 70 to 80% of the time. I want you to think of your rules as a flow chart. You'll be given a checklist for entry. So if my large chart has strong triggers, then I will look for termination conditions. And you guys remember the flow charts, like you don't have strong triggers, don't go to number 2. But if you have strong triggers, go to number 2. And if number 2 is true, then go define your entry. And what this does is it keeps you leaning on the advantages that produce the trade. So these three rules happen on only 2 charts. There is a large chart and a small chart. How's that for technical? The large chart, typically on the left of your workspace, is a very slow moving chart. It's a broad stroke of a brush. It's not easy to see change on the large chart because it is such a big picture of what's happening in the market, which means that you're going to use your large chart to define the direction that you should be trading as a brand new user following this plan. You're going to use the large chart to define the momentum, that first advantage that comes from rule number 1. And you'll use your large chart to define the areas that could be problematic, making sure that you have room to profit targets through rule number 2. Now, rules 1 and 2 must be met on the large chart before looking for an entry. Rules 1 and 2, it will take you 1 bar. That's it. 1 bar to be able to define momentum, direction, and areas. I'm going to open up my crude oil workspace real quick. I want to make sure that I have everything up. I'm a little late today. Inside of this 1 bar, if you will, are about 20 to 30 bars on the small chart. And guys, it literally is. The bottom of this bar, when you decide to take a trade, looks like a reversal on the small chart, but it's not. It just creates a little pushback. Your entry for the highest probability trend trade happens right at the very top. Looks like a tail. That's going to be a bounce off of areas. And guys, your trade is typically $100, $150, $200 in the good before your large chart ever prints the next bar. So we're going to use a very broad scope, a very big picture, and then a little bit of refinement. And that refinement is going to allow you to reduce risk and maximize potential. We use these 2 charts. It's funny, so many of you have heard this 1,000 times. Are you mouthing the words with me? We use the 2 charts because they really describe who's in charge in the market. We've all heard the phrase, the institutional traders, the big money. Guys, that's your large chart. When they wake up and say, hey, what a great day for an uptrend, they create an uptrend. And when they're like, wow, I'm excited about this uptrend, they create the momentum. And when they reach key areas on that large chart, they go, let's ditch this trade. Let's take profits. Let's get out. Let's reverse. Let's fight. Let's do something that can disrupt the small traders. Your entry chart are the fighters. This is the small crowd. They have more money than me. They have more influence than me. They're still big money. They're just not the biggest money. And they create those little retracements, those little fluctuations on the small chart that we can identify. And your rule for number three rule, is defining where their fight is most likely to fail. And guys, your rules are very specific. They are very precise, and you are going to pinpoint where their failure is most imminent. This becomes your entry for the highest probability trend trade. Now, here's the cool thing. When the rules are met for the high probability trend trade, the large crowd typically wins 70 to 80% of the time, which means that the small crowd typically loses 70 to 80% of the time. And when you enter the market at their spot, most likely to create a loss, this methodology gives you the potential to win up to 70 to 80% of the time. And confidence, my friends, comes from the memory of success. So 3 rules in 2 charts, and we're going to talk about the indicators being used. Do I have any newer users in here? Guys, when I talk about the indicators, I don't go into the technical. I don't go into the mathematics that create them. I don't go through the tens of thousands of calculations that create Fibonacci. We just give them names, and I'm going to teach you how to use them, guys. So on both charts, you will see divergence high lines and divergence low lines. These are a visual representation that there was a loss of momentum in the move up or the move down, and that's all it is. Divergence is synonymous with loss of momentum. You're going to see Fibonacci resistance, and this is an area when the market is trending up. It could stop it. It could create a bounce. Fibonacci support can do the same thing in a downtrend. Yellow 1-to-1s are fibs in the moment. So if the market is trending up, they can behave as resistance. If the market is trending down, they can behave as support. Just learn the names. Divergence highs, divergence lows, Fibonacci resistance, Fibonacci support. And this squiggly little fella is what we call a midband. And the midband runs right through the middle of your charts, just a moving average. Both charts will have triggers. Triggers are moving averages as well, guys. We didn't really reinvent the wheel. We just found a better way to roll it. Small triggers are 2 solid lines. Large triggers are 2 dashed lines, guys. They work together. So both dashed lines create the large triggers. Both solid lines create the small triggers. When they're up, they're green. When they're red, they're down. And we're going to use triggers to define momentum in rule number 1. You're going to use trigger lines to define termination conditions in rule number 2. You're going to use large triggers to define your amazing freaking entries for rule number 3, guys. Trigger lines show up in everything we do. So I'm going to break these down individually. We're going to talk about each rule. We're going to embrace the advantage they create. And guys, we're going to learn how to enter the highest probability trend trade. And all we're learning right now is how to enter. It has nothing to do with the money that can be made or lost. It has everything to do with recognizing 3 advantages. Strong trigger lines. Rule number 1 must lead the way, guys. And here's that same picture. Your large chart. This is where this rule is met. When the background is green, it's in an uptrend, looking for rules to be met for high probability trend trades long. When the background is red, downtrend, looking for rules to be met for high probability trend trades short, guys. The only way to have strong triggers in an uptrend is if both your small and large triggers are green as well. The only way to have strong triggers in a downtrend is if your small and large triggers are red, just like the background. So, little cheat code. If they don't match one another, the trigger lines, if the trigger lines don't match the background, guys, rule number 1 is not met. Sit on your hands, wait. Now, rule number 1, I think, is the easiest lesson. Let's do a little vandalism this morning, guys. In an uptrend, small triggers must be above the large triggers. There must be separation, space, between both small and large triggers. When there is, it looks very much like scissors that are open. Pretty cool, right? Scissors open is strong triggers. In a downtrend, smalls must be below. There must be space. Everything is angled down with the trend, and it looks like scissors that are open. And guys, When the scissors are open, you have strong triggers. When you have strong triggers, the odds are favorable for the market to continue in the direction of the trend. Not guaranteed to continue in the direction of the trend, but the odds are favorable for the market to continue up. The odds are favorable for the market to continue down. You're going to see on charts very often OFM. People are going to annotate their charts. They're going to be excited about this look because when you have strong triggers, it's difficult to stop that large chart. When you have strong triggers, it's the advantage that helps us break key areas, guys. It's strong triggers that even cover some of the mistakes for new users and help experienced users break out of the very basic plan. But momentum goes away, and as your scissors close, when the blades come back together, when the small triggers work their way inside of the large triggers, guys, this is weakness, the opposite of strong. Here the odds are favorable. When you have weakness, anything can happen up or down. And guys, I'm a huge fan of language. If I'm going to risk my money, if I'm going to take a chance, if I'm going to enter a trade, I want the odds favorable, right? I don't want to say to myself anything could happen. I want to know that it's strong. I don't want to feel like it's weak. So rule number one keeps you on the good side of momentum, and it only takes one bar. So here is crude oil. Do you see how the colors don't match? The smaller red and the larger green? I don't have strong triggers. What does strong triggers look like? Separation. And guys, it's not coincidence that the market continued down and even smashed through key areas with that momentum. And we're just looking for that first advantage, guys, because that first advantage makes trading easier. Is everybody good with that? Can you give me a why if you're comfortable? I love asking for whys, guys, because if you tell me yes, what it means is that, yes, Mark, I understand the lesson. Let's go to the next one. And if you say to me, hey, Mark, I'm not 100% confident with this. Could you show me more examples? Could you go in depth? Guys, the answer is always yes. I don't have a time schedule. Hey, good morning, Ed. Guys, I'm going to drag my feet and give you all the information today before we get to the live market. Once I have momentum, I love that only my experienced people give me yeses. They know that participation is the key. Once I have momentum, I have to make sure that I'm not trading into a termination condition. I have to have room to targets, guys. Termination conditions are where the large chart, where the big crowd is making decisions. So a termination condition, clinically defined, is a Fibonacci area that has the potential to reverse the market. I like to say horizontal lines on a large chart can stop the market. Horizontal lines, divergence highs, resistance, divergence lows, support, yellow one-to-ones. All of these areas are where decisions are being made. All of these areas are where buyers are exiting and sellers are entering and profits are taken, and fights between the large crowd buyers and sellers are most likely to happen, guys. And the market respects Fibonacci because the market created Fibonacci. So to define a termination condition, it's really a simple process. We're going to let the large crowd get to the area. And guys, this is an actual step-by-step of what it looks like when an area breaks. When price reaches an area of resistance, in this example, Fibonacci resistance, even a divergence high, you're just going to count trigger lines. And there's too large and too small, and they are all below these areas of resistance. Zero triggers through. Notice the zero is red. This is the textbook definition of a termination condition. This is an area that could create an untradeable bounce. This is an area that could set off a fight between the buyers and sellers. This is an area that could reverse the market completely. So when price reaches an area of support, or price reaches an area of resistance, let me go to this picture real quick. This is your termination condition. Price reaches resistance, no triggers break through, absolutely no trades into the area. Rule number 2 is not met. Price reaches Fibonacci support, absolutely no triggers through. No trades into the area. Rule number 2 is not met. We're just counting triggers. Assume the area is going to pull money out of your account. When 2 triggers break above an area, guys, for the brand new user, this is still a not yet moment. When 2 triggers break through an area with momentum, this area does have the potential to break. A lot of you are going to find opportunity later in life with only 2 triggers through. But for the brand new user, there are no long trades until 3 of the trigger lines, both small and 1 large, get above the area of resistance. Now the area has the potential to break. Potential is a very key word here, because potential should make you feel like, hey, I may have to manage this assertively. It's still not broken. My path still isn't clear. I'll take faster profits. I'll get to break even quicker, because it's still only the potential. The high probability trend trade, the clear path, is presented when all 4 trigger lines make it through the area. When both small and both large get north of resistance, resistance behaves as support, the path is clear until you reach the next area. Excuse me. For resistance, when all 4 triggers get below resistance, resistance behaves as support, and then your path is clear until you reach the next area. Now I'm going to show you. Let me see if I can find this picture. I think it's in here. I need to add this into my PowerPoint that I'm going to, but until I do, here we go. There will be times when your areas are stacked, when it is multiple fibs, when it is fibs and a 1-to-1, when it is a divergence low, a fib, a 1-to-1. And there will be times where you can't seem to get a clear path. Now guys, 90% of your day is spent reading indicators. 90% of your day is doing nothing. This is one of those nothing times. But this is where I remind you that the futures markets trade an average of $220 billion hourly. That's your futures markets. The S&P alone typically trades $174 million a day. It takes $400 a day to be a 6-figure trader, guys. You don't need every move. You don't need every turn. You don't need every tick. They're not all yours. Wait for the easy moves, guys. Wait for the path that is clear. Give yourself the highest chance of success, and what you'll find is that achieving success becomes much easier. So, are there any questions about defining a termination condition? When price, let's just open it big real quick. When price reaches Fibonacci support, as it did right here, none of the triggers broke, guys. That's precisely where the reversal came from. That reversal created strong triggers, which broke these key areas, and when that momentum went away and only 3 triggers were through, that's where the market started back down. Do you guys see it? So you'll be able to, in the moment, gauge the momentum. Smalls below the large, space between the 2. Odds are favorable for this market to continue down, but there's only 2 triggers through Fibonacci support, which means this is not my best look for going to my smaller, faster chart looking for an entry. This is the potential to break, but it's not my best potential because it's only 2 triggers. Does that make sense, everybody? In the beginning, you can keep it very black and white. It's either strong triggers or it's not strong triggers. It's either a clear path or it's not a clear path. And then once you get those concepts down, guys, once you understand momentum and path, it opens the door for the second trade on the KISS plan that I give you. It opens the door to see momentum trades. It opens the door for you guys that just love to jump the fudge in, having momentum and path. And I love those trades, and you guys are finding great success with it. And this is your core, guys. Once you have it, it's time to go to the small chart, the fast chart, the refinement chart. Let's go look for an entry. Is everybody ready to go look for an entry? Feeling good about it. We're happy. We're excited. Go make some money. We are so excited we can't even speak, guys. The advantage of entry comes from using a limit order to buy or sell a pullback at an area inside of triggers. And it's imperative that you learn that entire phrase. you are going to buy or sell a pullback. Let me get my large crowd, small crowd picture. When the large chart is up, when the large chart is strong, when there's nothing in the way, you are going to buy or sell a pullback, that little retracement created by the small crowd. You are going to buy that pullback, in this instance, at an area, at Fibonacci support or resistance, at yellow 1-to-1s, at a mid-band. Because on your small chart, the exact same way these areas could stop a trend on the large chart, they can create the bounce we need to continue in the direction of the trend. So you're going to buy or sell a pullback at an area, fibs, mid-bands, yellow 1-to-1s, and those areas have got to be inside of triggers, guys. Your small chart has two sets of large triggers, one that's native to the 5-1, one that comes from your larger time frame, and your triggers will be used to define where that retracement is most likely to occur. So here's your entry pattern. When the large chart is up, when the path is clear, when the momentum is strong, on the smaller chart, you're going to wait for a reversal bar. The reversal bar signals the beginning of the pullback. I say wait for the reversal bar. You're going to be anticipating and hoping for that reversal bar long before it happens. You're going to know exactly where you're going to enter long before it happens, but we're going through the very basic sequence, guys. Reversal bar begins the pullback. It's not your entry, guys. This is actually a loss of momentum that hopefully gets us back to our entry. When the reversal bar prints, you can define where the down bars are most likely to go down. Somewhere from the top of the large trigger lines to the bottom of the large trigger lines. This is your retracement zone. This is where it's most likely to retrace. Entries come from areas. Fibs, mid-bands, or yellow 1-to-1s inside. All caps, tons of focus. Areas inside of triggers. This is where the small crowd is most likely to fail. This is where the bounce and continuation with the large crowd is most likely to occur. You're going to activate a limit order just above the highest point of support, closest to the reversal bar, because your large chart is a freight train up. It has all the momentum, and there's absolutely nothing in the way to create a bounce. We're not going to trip over a couple pennies trying to save a few dollars, guys. You're going to activate your limit order, and you're going to hope, wish, want, and pray that that small crowd gets to you so you can take that highest probability trend trade entry. If trigger lines define the retracement zone, if areas within the trigger lines define the most likely spot for a bounce, guys, this is your window. This is your window of opportunity. This is where the great things happen, where the advantages are in place. Once you get below the trigger lines, I just call it the wrong side of the triggers. Once you get to the wrong side of the triggers, the market has already pushed through where it's most likely to retrace. The market has already pushed beyond where it's most likely to bounce. This is where rule number 3 is no longer in play. Guys, any lines beyond those triggers on the wrong side of the triggers, entries are not taken here, because if you get beyond those advantages, you don't know if, when, or where that market is going to continue up. In a downtrend, when you have momentum, when the path is clear, the pattern is exactly the same. And I'm going to share with you real quick, guys. On the tracking sheet that I give you, there's the entry sequences for both long and short. It's an awesome way to go back and study, to break it down, to make it very mechanical. Reversal bar begins the pullback, not the entry. The retracement is defined through trigger lines, large, synthetic. That's where the market is most likely to retrace. Entries come from areas inside of those trigger lines, fibs, mid-bands, yellow 1-to-1s. Your job will be to activate a limit order just below the lowest point of resistance. And because you've defined where it may retrace, where it's most likely to bounce, guys, any lines on the wrong side of those triggers are not entries. Any lines beyond those triggers are where your advantage is gone. Entries are not taken from the wrong side of the triggers, because you don't know if, when, or where that market is going to continue down once that advantage is gone. And guys, the pattern is the same, whether it is a long pattern, whether it is a short pattern, it's going to look the same for every trend trade that you take. And by defining where the market is most likely to continue, you have defined where the market should not go. You have a visual of where your advantage is lost. This is where initial stops are going to be placed. Your KISS plan will tell you that stops are placed 4 to 5 ticks beyond the triggers, where the market shouldn't go. And if they can push beyond all that good stuff, guys, you're going to take a loss. And anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. You will take smaller losses with the abandonment of hope. It's very precise. You're getting out not because you're scared, but because your advantages are gone, guys. And that's a very key phrase as we move forward with management. But once the market confirms the move in the direction of your trade, whether it's a reversal bar up or a reversal bar down, your risk is going to minimize dramatically at that moment, and you're going to have far less on the table as that market continues up or down. So the idea, really the most important thing, is that you can identify strong triggers, because that's your first advantage. So maybe don't spend your first week looking for the money. Spend your first day looking for strong triggers, guys. And in the spreadsheet here, the first tab, there's already 60 pictures of what it means to have strong triggers. It's annotated, it's pointed out, it tells you why it's strong triggers. And if you go through this drill yourself, go find 10 pictures, write that the colors match, that there's space between, that the smalls are above, that you have momentum, odds favorable momentum. Now it's time to look for rule number 2. You will never make the mistake between strength and weakness, guys. You'll never say, wow, I thought I had strong triggers, but the reality is I had weak triggers. And as you go through and learn it, there's more pictures, right? What is weakness? Smalls are now inside of the large. Weak triggers, not momentum. Rule number 1, not met. And guys, once you know the difference, you know when it's time to go to rule number 2. So the same is here for clear path, for terminations, even for entries. Go through and learn these simple looks. Piece them together to create a trade. Give yourself the highest chance of success and keep it simple. Before we go to TradingView, guys, I'm going to introduce you to the KISS plan for NinjaTrader. I dropped this and the spreadsheet in the room just a moment ago. Guys, your KISS plan is a stepping stone in your learning journey. It is not your only trade, it's your first trade. It's not the only thing you can do with the software. It's the trade that teaches you to read the software so that you can find more opportunities. It's designed to optimize your chances of success, guys. Your KISS plan will show you exactly where the rules are met so you never confuse it. It gives you a checklist for entry. Now this checklist is designed to optimize your chances of success, and it says if you have a termination condition that reverses the market, we call that a strong top or bottom, guys. In a termination condition, a strong top or bottom means that no triggers got through, and then the large triggers rolled from green to red or red to green. It means that the decisions made by the large crowd were so impactful at a key area that it reversed the market. That increases the likelihood of success, but it's not mandatory. But I want you to learn to recognize strong tops and bottoms, because you're going to need them for the second trade on the plan. It reminds you that it has to have strong triggers, and there are links to pictures as you study, that no termination conditions exist, and that there is an area for entry inside of those triggers on the 5-1. And guys, if you can mark yes to every one of these things, you are in the highest probability trend trade. You're in a trade that typically wins 70 to 80% of the time. You're in a trade that creates confidence through the memory of success. You're in a trade that's taught you to read your indicators through one entry. But all you've done is defined entry. So guys, before we go to TradingView, we're going to talk about management. Management is the second half of entry. So in order to manage a trade, and this is what I was working on this morning, and I'm going to share it with you guys, because this was dedicated to NinjaTrader. Every new trader is provided a checklist for entry, guys. And as you grow beyond the KISS plan, as you begin to write your own plan, I encourage you to write out and know without question the advantages that are getting you into a trade. The trades that you create, the trades that you take beyond, have a checklist, because your checklist is telling you why you got into that trade, what was on your side. For example, momentum path, defined entry on the small chart. That's the advantages that produce a high probability trend trade. Name your trades. Well, when I know that gets me in, what gets me in, guys, I can use that same thought process to exit a trade or to tighten management, because when I know what's good, when the good stuff goes away, it's time to manage. The advantages get me in that go away, it's time to manage. So if I no longer have a clear path, that's a great opportunity to exit a trade. If momentum goes away, that's a great opportunity to tighten management, guys. We saw a great example of it live yesterday. If price gets beyond my defined entry area, that's a great reason to exit. And these are indications of change that let me know that I no longer have an edge, guys. So allowing management to be just as mechanical as entry, every bit as mechanical, 100% if then, that's what helps you manage these trades. It's difficult as a brand new user. There's a lot of adrenaline, there's a lot of emotion. So what I've given you on the KISS plan is a way to manage. And it's based on 2 contracts, guys. And KISS management is designed to help you understand and trust stop placement, putting your stops where the market shouldn't go, as well as being focused on getting paid. I think that the biggest drawdown for new users is that you believe every at-bat must produce a home run, that every trade must be a $500, $600, $700, $800 trade. And the reality is, everybody's thinking it, base hits pay bills, guys. Your market or your account doesn't know if it was 4 $100 trades that put you in a 6-figure year, or if it was 1 $400 trade. So the KISS plan will be designed to help you learn how to get paid, to accept getting paid. And you will craft a plan based on your personal goals, based on your experience reading the indicators. There's my little default right there, guys. This is not shackling you to one thing. You certainly could and find success. This is opening the door for you to learn to read your indicators so that you can take great entries, so you know how to manage them. And guys, your entry is the first step in management. Having strong triggers is the first step in management. Having nothing in the way is the first step in management. Taking a great entry is the first step in management. And then once you take that great entry, it is 100% if then. If entry is 2 ticks below resistance inside of triggers. That should sound familiar. Then the initial stop is 4 to 5 ticks beyond the triggers. If then. Guys, you will know where your stop belongs before you ever enter the market. And this is defined as where the market should not go. This is defined as where the advantage is gone. This is defined as where I'm willing, and I am so willing to take a loss here, but you better believe they're going to have to come get me. Targets are predefined in the KISS plan, $100 and $200. So if I enter at 71.34, my initial stop is 71.49, guys. That's $150 per contract. That is $300 of risk. You have to be okay with $300 of risk, because if you put your stop in the retracement zone, it's likely to get hit only to have the market continue down. If you put your stop below resistance inside of triggers, it's likely to get hit only to watch the market go down. Your initial stop belongs where the market should not go. Now, I encourage new users. I do a lot of encouragement. Let it play out. Don't impose your will, your opinion, your emotion, your fears on the market. Let it play out. If you don't get stopped out, if they don't come get you, guys, your first stop movement is when a reversal bar prints in the direction of your trade. You will redefine where the market should not go. We call this a confirmation bar, because you are confirming that the market is now going down with momentum, with a clear path from the area where it was most likely to go down from. And this new stop, 2 ticks above that reversal bar, is where the market should not go. It does not guarantee a winner, but now you have $30 of risk per contract rather than 150. You have a whopping $60 risk on this trade with 2 contracts, and it's either going to go to your first target or it's going to come get you. You're not in control of that, but you have minimized risk dramatically. Your first profit is taken at only $100. And guys, it's not uncommon to see your great entries getting paid on the first bar. It happens a lot. And if price reaches your first target, one contract is automatically pulled off by NinjaTrader. Those funds go into your account. You are a winner. Children sing songs about you, Pablo. And with one contract remaining, you will move your stop to break even. And notice that I don't say where the market should not go. Guys, they can come get you right in an area inside of favorable large triggers. That break-even stop is not the best stop. That is the new user stop. Creating courage for you to believe in your heart that the only reason you took this trade is because of momentum and because of a clear path, and you are trusting that the market is more likely to go to a $200 target than it is to hit a break-even stop. And guys, if they hit your second target, that's a $300 trade. That is a $300 profit over the course of probably 3 to 4 minutes, guys. And $300, if you shut it down every day at $300, that's a $75,000 year based on 252 trading days a year. $75,000 on one simple high probability mechanical trade. Guys, if you spend any time in my room, if you spend any time getting feedback, if you spend any time learning to read these indicators, you're going to see all the potential from the second row. If you use a trade copier, find a way to make 200. Do it on 10 accounts, right? Turn it into $2 grand. Make it a $500,000 year. But the goal is that you can consistently reach profits, daily reach profits, taking the highest probability trend trades, guys. So that is the KISS plan. You now have everything that you need to be successful with NinjaTrader, guys. You have a place to study. You have over 500 pictures of the pattern. You have a place to put your rules. You have a trade tracking sheet. You've got a place to build your plan. You have been giving these in the spreadsheet. The only thing that you need at this point is the experience to make it easy, the repetition. That's on you. So get to work, dagnabbit. You can go back and study that high probability trend trade by going back historically, identifying momentum, making sure that your path is clear, defining your perfect entry, guys. And if you scroll back historically, you'll see these tails on a large chart. When you have momentum, guys, when the path is clear, let's see if we can find one. When it has the potential to break, you'll see a tail. So this was at 8:53 a.m. If I go back on my small chart, does everybody see that that was a pullback to an area inside of triggers and the market continued down? That's your pattern. Back it up. All pullbacks to areas inside of triggers. So learn the pattern, learn the process, learn to read the indicators very simply so that you can grow. TradingView. TradingView is what we're using in Nexgen Pro Trader funding. TradingView is used by 100 million users, guys. TradingView is a very stable platform. And when you look at your TradingView charts, the only indicator difference is zones rather than Fibonacci. So if you're using TradingView, I can't force you to go buy this third-party indicator from ChartPrime, but I'm going to tell you I can't imagine life without it. It is accurate. Supply and demand, guys. Support and resistance is all it is. So the same way you would treat a fib, you would treat these zones. Don't trade into them. Make sure you have room to them. The TradingView workspace uses big chart, little chart, same thing. It uses a 15-minute chart as the large chart. And guys, 15 minutes is a long time. There is so much that can happen inside of 15 minutes. You can get 70, 80 point bars inside of a 15 minutes. So it's really slow. And you'll notice that it doesn't even have large triggers in the TradingView plan. The plan that I give you guys, there's workspaces that look just like this. It doesn't have large triggers. It doesn't even use background colors. It's just too freaking slow. We're going to let the 15 minute define the direction we're trading, identify the momentum that we have in that move, and key targets and terminations, making sure that we have room. Momentum and path will be defined on the large chart. Your small chart is a faster chart. It's a 1 minute chart. And guys, there's still a lot that can happen in 1 minute. One of the cool things about minute bars is you can use a countdown. And you can use that countdown to create patience as we get into the rules. This will define the immediate strength of the market using these trigger lines, and it will define entry points, and you will be given a checklist for entry, exactly how to do it. Once again, big crowd, large crowd, guys. Know who you're trading with. Know who you're trading against. The large crowd wins. So we're going to do a large chart read. There are 3 things that if you learn how to define these on a large chart, guys, it's going to set you up for success. It's going to keep you out of a lot of problems, and it's going to keep you from fighting and forming opinions. The first thing is, what direction are the small triggers going on the large chart? Most people are comfortable with up and down. If they are down, I'm looking for rules to be met for short trades. If they are up, I'm looking for rules to be met for long trades. If I can't tell if they're up or down, if they're trying to go up, if they're trying to go down, guys, I don't have the advantage of direction. This is where sitting on my hands and doing nothing tends to be the best choice. In this particular instance, the small triggers are up. Does everybody see that? Both lines are pointing to the sky. So I'm looking for long trades as well. The second thing I do is I ask myself, where is the current price in relationship to the triggers? Where is the most current price in relationship? Where is the now price, the highlighted price? Red news in 10, 8 minutes. Thanks, Pablo. 8 minutes, guys, till red news. And there's 3 options where price can be, guys. It can be left of the triggers. It can be inside of the triggers. It can be right of the triggers. I'm still only looking for long trades, but by understanding where price is trading currently, this is how you're going to define the momentum in the move. This is how you're going to define how you're going to have to manage the trade. If I am left of the small triggers, this is the strong side. And I want you to type that on your charts. Strong side. That should paint a picture. When I'm on the strong side of the triggers, this is the bigger hold look. This is where 1 minute areas are most likely to break, guys. Left of the triggers is where the great stuff happens. If I am right of the triggers, this is the weak side. Once again, the opposite of strong. I'm still looking for short trades because, guys, in one bar, you can go from the weak side to the strong side. But I'm going to be very aware of 1 minute areas. I'm going to make sure that I'm managing aggressively because it's the weak side of triggers where the market resides right before a reversal. The weak side is where you are right before a reversal. And then there's going to be the transition when price is literally trading inside of the triggers, not strong, not weak, guys. I'm still going to be aware of 1 minute areas. I am going to be ready to manage. I'm going to be taking risk off of that trade when I reach an area. So understanding whether you are strong, transition, or weak sets up the management idea, sets up how aggressively, how assertively you're going to be in management. And then the final question is, do I have room to targets? Is there room to make money? The biggest challenge that I see in this room are people trading directly into areas and then just wondering why the hell the market didn't continue forward, guys. If I don't have room to a target, it's easier to not take the trade rather than hope. So first it's direction, then it's momentum, and then it's path. Are there any questions about reading a large chart? If you get good at this, entries become easy, guys. And there's only 2 entries. There's only 2 entry styles, I should say. There's a momentum trade, and I cover this one first. This is the one that relies on everything being just giddy up. in the direction of the trade. So it begins, no termination conditions on the large chart, not trading into areas. And then my 15-minute chart must be on the strong side of the triggers. That's my best momentum look, guys, and I can't take momentum trades if I'm void of momentum. My 1 minute must have strong triggers, guys, and this strong trigger look is no different than the strong trigger look on NinjaTrader. In an uptrend, when everything is up, my smalls must be above the large. There has to be space. Everything's got to be going the same direction. In a downtrend, it's the exact same thing. And then if I have strong side, strong triggers, nothing in the way, guys, this is the only trade on TradingView. You NinjaTrader junkies that are making the move, this is the only trade where you're going to use a limit order for entry, and you're going to use a limit order to buy or sell a little snapback right at an area, right at an HVA. And it looks like this going up. The smalls are up. We're on the strong side of the smalls. There's nothing in the way, guys. This is the perfect large chart. On the small chart, price is coming up and it hits this zone, guys, and you got to say to yourself, this zone could stop stuff. Let it break, because resistance becomes support. Let it pull back. That's where your limit order goes, guys. Right there, right at the top of that zone. Momentum trades will account for maybe 10 to 20% of your trades. Momentum trades don't happen as often as you'd like them to. Momentum trades are nothing more than a hope that the market just can't turn with all the good stuff going on. In a short trade, first it's strong side, nothing reached, there's your break, and there's your pullback. You're entering right on the pullback to that zone, hoping that momentum continues in the direction, guys. 10 to 20% of your trades are momentum trades, maybe. The most common trade is the trend trade entry, guys. I love the trend trade entry. The trend trade entry demands patience. The trend trade entry keeps me from fighting anything, guys. And yeah, it starts 15-minute not trading directly in anything. Room to targets, guys. 1 minute not trading directly into areas. Room to targets. I can't stress that enough. You will buy or sell a close on the correct side of the small triggers at a 1 minute mid-band area zone, guys. And it looks just like this. When the smalls are up, they're in transition. That's setting up my mentality for management, and I have room to targets. Everything is cranking up. Do you guys see how they never broke above that zone, really? They tried but failed. That's why there is no momentum trade. It didn't break in return. And then my small triggers roll against me. My small triggers begin to point down. The second my small triggers point down when everything here says up, I have to wait for a pullback to an area. Wait for a pullback to 1-to-1s, to a zone, to a mid-band, guys. If there is no area, there is no trade. When it reaches the 1-to-1s, I'm waiting for an up bar that closes on the correct side of the small triggers. Now the correct side is the weak side. It's the no longer fighting side. And this becomes your entry for the trend trade. And you can scroll back historically and see how the market doesn't go down until it closes on the correct side of the triggers. And the market doesn't start up until it closes on the correct side of the triggers, guys. It has to get to the other side of the triggers to have a fighting chance of trading with the large chart. That's your long entry. And then this is your short entry, guys. The triggers are down. Price is on the strong side of the triggers. And the second those small triggers roll up against me, I have to wait for a pullback to an area, to a 1-to-1, to a zone. And no close below, no trade. No close below, no trade. No down bar close below, no trade. And then finally, guys, you get to the good side of those triggers with a close, and that's where the market starts down. This is your trend trade entry, guys. This is going to be most of your entries. And that's TradingView. So great entries create manageable trades. Look at NinjaTrader, guys. Smalls are up, large are down, no clear path up, No clear path down. Does everybody see it on crude oil? That my highest chance of success right now as we speak is to not do a darn thing, to go make a sandwich, to do anything other than hope I can predict what the market's going to do. We might be in the middle of a news spike right now. Smalls are down, large are down, space between. I don't have room to targets. The same way I didn't have room to targets here, the same way I didn't have room to targets here, guys. There is no trade to take, no entry at an area inside of triggers, no loss. Pretty cool, right? Rules will keep you out of so much trouble. This is the NASDAQ. This is one of those examples, guys. I don't know if they're going to go up or down depending on the fluctuation. Hard to define direction. They are up until they roll. Small triggers turned against me. I would need a pullback to an area. I would need a close on the correct side of the triggers before I ever considered going long. And I have 55 seconds to think about it. Are there any questions about the reads, guys? Whether it is NinjaTrader, whether it is TradingView, your TradingView plan. It'll give you the workspaces that you need. It'll tell you how to use the 15-minute chart. It'll teach you how to read your 15-minute chart. It'll talk about the two different entry looks, guys, whether it's momentum, whether it's a trend trade, and it will give you a checklist for entry. Great entries create manageable trades. You guys with me so far? Feeling good? All right, I made a TradingView management slideshow, guys. This is the one I need a little feedback on. This is the one that I'm hoping helps you guys out as you learn to manage these trades based on the entries that you're taking. And this one, it's the same thing. We're talking about advantages, but advantages present and go away a little slower on TradingView. So let the large chart lead the way, guys. Know how you're going to manage that trade. If you're in on a trend trade, if the market pulls back to an area, to a mid-band, you enter on the close below, guys, your initial stop goes above the pivot high, beyond the zone that creates a bounce. This is a trend trade stop placement for a short trade, where the market should not go. This is the area that we're anticipating creates the bounce, pushing it in the direction of the trade. This is where the market should not go, guys. This is where the advantage of your entry is no longer in play. Same is true for a long trade. Coming down, hits the areas. You finally get a close on the correct side, but your stop goes below the pivot low. That's your initial stop. That's where the market shouldn't go. That's where they change direction. That's where they started in the direction of your trade. So for you trend traders, using pivot lows initially, areas used for entry, and then you can use those pivots when you're holding for bigger moves to follow. So if I get short here and the market comes down and I don't have any reason to exit, comes back up, heads back down, there's my new pivot, there's my new stop. Market comes down, comes back up, all my rules are met for a short trade, I'm not exiting that trade. I'll use the new pivot for a new stop placement. This is how you can lock in profits as the market moves in the direction of your trade, whether it is a short trade or whether it is a long trade. First it's the pivot, then it's the stop, or the next pivot, then it's the next pivot, and you could just keep doing that all the way up until it's time to exit your trade. Does that make sense, everybody? As you start to get into management, let your initial stop be where the market shouldn't go, and let the opposing force fail and go in the direction of your trade before you move those stops. For momentum entries, when you have strong triggers, when you pull back to the zone, guys, your initial stop is like 2 to 4 ticks above the zone expected to hold. Momentum trades fail all the time. When momentum trades fail, they typically turn into trend trades. So these are small risk opportunities, guys, to really capitalize on all the momentum. When they work, they're amazing. And when they don't, guys, it's negligible. The risk is small. So using the zone that gets you in. And just using the zone that gets you in. And guys, I'm telling you right now, 5-tick, 7-tick losers really don't hurt. Especially when you're taking the right trade. So There's your momentum stop placement behind the zone that gets you in. Trend trades are behind the pivot. And then some of you are jumping in on these breakout trades. This was an awesome picture. And one of the things you can do is you can say, okay, here's where my rules were met. Now I've broken through the area. I'm just going to put my stop behind the area, the line in the sand that I'm expecting to hold if this trade's going to continue up. So when I break above a zone, I don't expect them to get back below that zone. I can move my stops behind that zone. And you see it right here. As the market breaks above that zone, guys, my protective stop is going to go below that area, because if they're really going to continue up, they shouldn't be able to get back through this zone. Does that make sense? So this is great for moves within the move. As the market is running, as you're holding for bigger moves, protect yourself. And now I'm going to give you one more concept, guys, and this is a little more advanced. Every bar on your small chart using market flow has what we call a high volume area. This high volume area is the highest concentration of sellers. This is where all of the sellers got together and they pumped the most money into the market to make it continue up. I can put my stop a couple ticks below that HVA, below that zone, because very often they don't get back below it if they're going to run. Great way to use HVA for stops. And here's a couple pictures of it. So HVA is the highest concentrations of sellers in this bar. If the buyers push past that important number, guys, they may be able to continue the push up. So if I'm holding for big moves, I'm going to look where the next bar opens. If it opens below that high volume area, the sellers are remaining in control. And if they never get back above it, guys, they're more likely to go down than up. Great place for a stop. Does that make sense? It's a little more advanced. You're going to want to go study this one. But this is how you're going to get more out of trades in the future, guys. More out of trades as you grow. And now look at this. Here's another down bar. Here's that highest concentration of sellers. Guys, do you see how the next bar opened above it? How the buyers said, F you sellers, we want it to go up? Guys, this is the beginning of the bounce. Right there. There's your indication. Now here is your big red flag warning, my friends. You're going to try to take the wrong trades using high volume areas on bars. Don't do it. Enter the trade per the rules. Use the checklist. And then you can use those high volume areas to just create little advantages as you learn to manage trades, guys. So there's the PowerPoint in the room. I wanted to share that with you guys. And now we're at the point of the day. I love this. We're at the point of the day where you've been given, if you are a NinjaTrader user, and I'm going to drop it all in the room again, you've been given a plan for both platforms. You've been given spreadsheets for study for both platforms, guys. You have been provided the rules. Everybody has the ability to simulate and post in the room to get feedback. You have your plan. Guys, you know you have looks at the patterns. The only thing you need to do now is commit them to memory, to practice, to be willing to post in the room, to get a little feedback. Because when you post in the room NinjaTrader charts, I'm going back to momentum, path, and entry. And some of you are going to feel like I'm beating the ever-loving snot out of you. You guys trading in determination conditions. You guys trading without momentum. You guys jumping in for no reason at all. I'm not. I'm talking about what's good and bad to help you optimize your chances of success. Trade your plan. I'm not the trade police. But this is an educational room, so I would be remiss if I didn't point out momentum, path, and entry. When you annotate your charts, guys, you're committing the look to the words that describe it. You're writing the recipe for success. When you annotate your charts, you're also pointing out the problems so you know how to manage that trade, so you know what you're up against. On TradingView, on NinjaTrader, I really do. I ask you to give me all of this. If you don't want to take the time to annotate, guys, why are we doing this, right? The point is feedback. If you don't tell me what you see, how can I tell you if you saw it right? Get some work done. TradingView, describe direction, describe where you are in relationship to the triggers, describe whether or not you had room, and talk about which entry you took, guys. And if you can't take the time to do that, how am I going to give you feedback? And that's where the next half of class comes in, guys. The rest of class will be dedicated to posting the pictures that you posted. It will be dedicated to your chart reads. It'll be dedicated to feedback. And if time allows, guys, we'll go to the live charts. We'll do the reads. And if the rules are met, hell, we'll even enter the trades on simulator. Let me get to paper trading, because this is an educational room. I don't tell you when to enter or exit a trade, guys. What I teach you is how to read your indicators so that you can make good decisions, so that you know what you're up against. So everything is recognition of advantages. Momentum, clear path, and entry is the best. When one goes away, like the second trade in your KISS plan, it's now medium probability. When two of your advantages go away, guys, it's low probability. Why the heck would you want to risk your money? But you're in control of the entry. Nobody is going to make you enter the market. Nobody's going to tell you when to enter the market. Nobody is going to say, hey, it's time, go now. You have to make that decision for yourself. Knowing what's working for you and against you helps you make that decision. Helps you make the decision on whether you're willing to enter, and also on how aggressively you may need to manage that trade. So as we get into the second half, guys, don't be the trade police. Don't be the person that says, ooh, Victor broke the rules. Don't be the person that says, ooh, Rat traded into a termination condition, guys. Focus on your plan, but use the chart reads, right? 2 triggers are through. 2 triggers are not. I have momentum. This area has the potential to break. You, as a brand new user, don't have an entry until 3 triggers are through. You experienced users might have been long right here at a mid-band in the retracement zone because of that level of momentum. Neither is wrong. It just has to be right for you. So I'm going to take about 5 minutes. I'm going to stretch my legs. When I come back, guys, I am going to go through every picture posted. And I'm going to tell you right now, it's the Pete show for the first 10 minutes of class, guys. And Pete, despite 10 years with Nexgen, still posts in the room, still asks for feedback, still accepts the advice, and still breaks the hell out of rules sometimes because he's human. But he knows when he's breaking the rules. He knows when he's up against a termination condition. He knows if there's not a clear path. He knows if he's just jumping the fudge in. And you guys will notice that all of these charts that are posted in the room contain annotations. All of these people will talk about what they see. Everybody in this room talks about why they did what they did. Everybody that posts in my room is requesting feedback, and I love that because I love to get feedback. And guys, very often, the smallest mistakes are easy fixes. The biggest challenges are easy fixes. All I need to see is what you're thinking, and we'll get you those fixes. So I'll leave you with the S&P, guys. We'll see how far momentum takes this move. We'll see if there was an entry. I'm going to get out of here for 5 minutes. When I come back, it is Feedback City. And I am good on clicks, on charts, all the way down to UBOAS at 1012. So I'm going to make that note. Anything posted after that will be where we start on the next round. All pictures are answered in the direction presented. So watch the S&P, guys. I'll see you in 5. divergence is not true, this pullback to an area inside of triggers fits the KISS plan. First, it's a strong bottom, a termination that reverses the market. Then it's odds favorable momentum. Then it's 3 triggers through, which means the potential is there, but it's not yet a clear path. If I am able to get a pullback to an area inside of triggers, ladies and gentlemen, that is your medium probability 50-50 trade straight out of the KISS plan. The only thing that I need to worry about is whether or not divergence is true. If it is, if I get a magenta line and a negative number, my KISS plan says no trade. Is everybody with me? Before we get to pictures, guys, we got a potential live trade here. That is the best of the best. The way I teach is the best of the best, not the only way. There's a lot of you that are saying, there is no way on God's green earth I am not taking this entry. With this level of momentum, with all of that great bottom, with such low risk, wild horses. And guys, remember, it's not my job to tell you how to trade. It's my job to teach you how to read indicators. So let's go back and see how you're reading indicators. There is the news. All right. Whoops, these are some of mine. Don't need that. There we go. And I love the annotations. 15-minute down triggers, weak side, not a clear path, 1-minute bar for entry, aggressive stop, no money made. And guys, this is a great example. Absolutely nowhere to go. Directly into trouble. Directly into trouble. And guys, this is how you create stress in your life. Because when this doesn't win, your brain gets sad. And when this doesn't win, you can't figure out why break even is happening to you, guys. Embrace that phrase, room. Let there be room to make money. You can define how much room that needs to be. My personal plan says, if I can't make $100, I don't want to take the trade. If I don't have room for it to go $100 before I have to manage, I choose not to take the trade. You'll have to come up with your own idea. Here comes my rule breakers. Based on amazing chart reads, guys. So check this out. That's a termination. And then it almost makes it. And then that's a termination. And that's a termination. And 4 times the market hit Fibonacci resistance. 4 times the market lost momentum. And Pete says, dag nabbit, now it's reversed. And now it's giving me momentum. And man, what an awesome look. I'm going to get in on that before my small chart even rolls. And he lets the small triggers roll. And then he just jumps in. And his jump in is so far before that momentum is established, guys. It's after the pivot stop out at Fibonacci resistance. He has the same thing over here, and he says, man, if this doesn't at least push it down to the mid band, then this pattern is bunk. And there's his entry. And look at his aggressive management. And his aggressive management is right there at the mid band. 1 off at the 1-to-1s, and then 1 off with a loss of momentum. Pete, it's a great trade. It's counter trend, ladies and gentlemen. It is a beautiful read using Fibonacci to determine where the market is most likely to reverse. It's recognizing a couple patterns, and it's really finding the move before the big move. Pete, nicely done. This is what we call a strong trending market, guys. 30 plus bars in the same direction. When you have a strong trending market, I just want you to say, hey, rule number 1 is met. It's a strong trending market. The odds are favorable. It will continue to trend. And when I have a clear path, what Pete does is Pete jumps in above all the trouble in a strong trending market. And then the fib update hit and makes Pete question everything, I'm sure, right in the moment. But with everything up, with everything strong, with nothing in the way, Pete just jumps in and makes money. And that's a fib update. That wasn't there when he entered, which is always kind of funny after the fact. And guys, with momentum and path, you will find a way to make money. You will find a way to take the software to the next level. Pete does it really well. And then termination. Pete doing a lot of counter trend trading. Termination, odds favorable momentum against his trade. 3 divergences in the same price range is also a termination. So what Pete is seeing is both time frames providing terminations. And then Pete, you're getting above the large triggers, which is helpful, and just jumping in and hoping that market pushes up a little bit off that divergence. Ron would call this a pirate trade, recognizing terminations, letting the small chart tell you that it's struggling, getting on the good side of those small triggers, and riding it up. And it's really well done, Pete. And for the new user, it fights everything that I teach in the first hour. For the experienced user, it's an awesome opportunity. And you get to that point. And then Pete, you did it again, and now you're starting to get cocky. And I'm going to tell you why. Because that's not a termination condition. In the mid band just held, and the small triggers are up, and this is a bad top, and Pete, that's an awesome freaking look for the market to continue up. You didn't even have divergence on your small chart. You just said it got below the fib. I sure as hell hope it goes down. Do you see the difference between the trades? Good morning, Miss Cindy. And this is where I come in, guys, and I'm not beating Pete up for it, but his other two trades, the ones that worked flawlessly, had termination conditions on the chart, right? The ones that worked flawlessly had terminations on 2 time frames. This is such a different look, Pete. Such a different look. And I would say you probably got lucky on this one, that they decided to go down. But you take quick profits because you know it's assertive. You don't sit, hold, and hope because you know it's assertive. And then when it does turn and all that momentum hits, you're like, let's make more money and do it beautifully. And guys, Pete is 10 years into this. And the only thing that I ask, because I'm in a room, is I want to make sure that, Pete, you understand that that's not the pattern, right? If it's not a termination, it's not the pattern. Good stuff, man. I'm not here to beat anybody up, guys. I'm here to recognize any sort of challenge that I see to make sure that you saw it too. That's it. Everything says up. The market is screaming, strong trending, nothing in the way. Pete says, man, I'm hungry. Let's have a chili dog. Jumps in with the clear path, jumps out before momentum can subside on the first contract, and then once it does, takes it off on the second contract, guys. Do you see how this is, I think, 4 trades now? That reversal bar, that close on the wrong side of the triggers, is the perfect exit for Pete because that's a loss of momentum, guys. And if you are taking trades where all you do is jump the fudge in, that's a beautiful exit. That's a great thing to add to your trading plan. Nicely done, Pete. Great awareness, awesome execution, all the momentum, getting below trouble. This is the textbook momentum trade. He gets in below the trouble, out at the first sign of trouble, uses the reversal bar, trailing stop, and the cool thing is it just pulls right back to an area inside of triggers. He gets in back below the area and makes money all the way down again, guys. And everything is based on momentum and path. And this is what I love. Pete, can I brag on you for a second since I busted your chops on the last one? Make money to the thing that can stop the market. Start making it again when you clear it. And it was this little area right here where he managed out because of the problems. Right at the key area that could create a bounce. And Pete, you do it well. And it's all predicated on momentum and path. And then he just takes it down to the next fib. Because with momentum and path, very often the market goes to the next fib. Nicely done, Pete. Whew. It's hard to sing your praises so loud every day. And there it is again. Momentum, potential to break, let it get past the bouncy things, make money on the way down. I mean, half off at 10 ticks, that's $100. The second contract off at 44 after getting in at 61, that's another 170. It's a $270 trade, guys. And you're doing it in the afternoon when crude is freaking dead. That was from 17 to 07. That was like a 50-minute trade. And they add up, guys. No matter how you count, 100 plus 100 plus 100 plus 100 is $400. You don't have to make it all in one sitting. Everything says up, jump in, get paid. Everything says down, jump in, get paid. Sorry, Pete, we're going to paraphrase on a couple of them. Everything says down, jump in, get paid. Rinse and repeat, guys. Did I mention in the classroom that as soon as you understand momentum and path, it starts to open doors? How do you learn momentum and path, guys? From learning the high probability trend trade. You begin to understand where the market shouldn't go. You begin to understand these advantages. And with the study, my gosh, you begin to embrace these advantages and capitalize on these advantages. And Pete, thank you. What a great way to start the day. If you're brand new and you're wondering if the software works, you're damn right it works. You just got to learn how to work it. That's the key. That's what I'm here for. We'll teach you. All right, Andy. Triggers are up. Transition to weak side, room to trouble. You get in on, so there's your close on the correct side, Andy, at 72. Do you see it? And from 72, you've got about 8 ticks before you hit trouble, which gives you room to manage. But when you enter at 74.2, you've got 3 ticks before you run headfirst into a wall. So this is where I'm going to say having room creates advantages. You waited until that closed. The small triggers had already rolled up. You had closed above the mid band. That's the perfect entry. It's the perfect entry. And it gave room to manage. And look at how they rocketed off that perfect entry. And guys, you'll see this a lot. When you take the best entry, it is so rooted in a pattern that has been proven to win more than it loses. Very often, the next bar is a screamer. And that's exactly what happened there. It's a great trade, Andy. You just didn't have much room. So it was $60 minus the 10 for commissions. It's a $50 trade. It'll add up, but it's easier with room to targets. Triggers up. Strong side of triggers, nothing in the way. Profit target was 180. Right on. It didn't make it, right? Because of that brick wall. Just because you say my profit target, and this is for everyone, not just for you, Andy. Just because I say I want it to go here, it's not obligated to go there. Just because I want it to be $720, it doesn't have to be $720. Guys, I'm not in control of that. So let's go back to that concept that we talked about. I know, but it's the same idea, right? You set it at 720, somewhere up here in the middle of nowhere. Doesn't mean that it's going. That's the point I'm trying to make. Trading is about advantages, right? Everything is up. Andy, you let it pull back to the outer band and you take an entry on the correct side, 82. And then I want you to watch how things change as you're in this trade. So the smalls are already below the large. And the market continues up a little bit. And then you get a breakout bar down in the middle of your trade. And then it goes back up, and that's cool, and you get excited. But when it goes back up, your large triggers are still pinching and rolling. Your small triggers are pinching and rolling. Then you get another down bar. And now your small chart is facing down with the smalls below. That would be that recognition of change. That would be that, man, my small chart's telling me some stuff. I love that you made $120 on this one. And then I'm guessing that it probably came inside and maybe retraced before it started back up. This is that change that you won't see on a large chart, guys. That's one of those great management things. And when you're taking trades from the outer band, you don't know if it's going to be a runner or if they're just in that exhausted point ready to play their exhausted card. Great management on that one. Great job getting to it. Great recognition of change. But guys, remember, whatever gets you in, pay attention to it. Lots of not getting through here. I love that. That's a technical term. When the mid-band holds 4 times, there is lots of not getting through there. And I'm laughing because I love the way you phrased it. But what it is it's a recognition that they keep trying and keep failing at a key number. The same way Pete recognized that they kept trying and kept failing at a Pete number, or at a number. Key number, not a Pete number. Sorry, Pete. And then when it rolls and she gets to the strong side and she's got some room to the zone, look what she does. She patiently waits for the pullback. She enters on the close on the correct side, and she makes money all the way down to the zone. And Jen, you had the courage for a 4-lot. Congratulations. 4-lots can be scary because from your entry, you had a lot of risk, right? But with all of these advantages, Jen, it never even blinked, did it? And once again, and I want to go back to this idea of great entries, look at the bar after the entry bar. Absolute screamer in the direction of the trade, guys. When it's right, you see that a lot. Nicely done, Miss Jen. And then Paul takes the perfect long trade. And Paul, man, I watched this one and I almost took it, and I thankfully looked down at my clock and remembered that news was coming early. Paul had everything up, nothing in the way, super strong, beautiful pullback, excellent entry. I mean, Paul, this is the perfect trend trade long. And then freaking news came in and just walloped you. But guys, losses happen. And every one of us in this room will probably forget to look at news at some point. So I don't want to focus on the result. I want to celebrate the process. I want to celebrate the perfect chart read. I want to celebrate all the advantages. I want to celebrate the best entry you could ever take. And the news got you, right? But guys, that's the one. Like, if I were wanting to put what is the perfect trend trade look, right? And I wanted to put over in my trading view journal, what is the perfect trend trade look? Well, it's this one right here. That's HVA. Here's my trend trade. It's Paul's perfect trend trade look. It's exactly what he did. He followed the checklist. Perfect. And I can't talk and type at the same time. Nicely done. Nicely done. And then Pete, you took it in NinjaTrader. Awesome. We'll get to it. Great trade, Paul. And then Pete, is this the same one? And Pete, I love this because this is the same way you went short earlier almost. So bad top, get the bounce, everything continues up with a clear path, and Pete takes the little snap back and he's like, I'm not going to get in right at the mid band because it's below the fib and I don't have momentum. I'm going to get in when it confirms the direction, and I'll get out of trouble. And Pete, this is absolutely beautiful. And you entered, and we are best friends forever. And he wrote it right on his chart. So now Pete and I will celebrate Christmas together based on this trade. Just kidding. That's his annotation for the big fat fib, which is a 21.3 fib. It's a higher time frame fib. Nicely done. All right, here comes the rule breaker. And I love this. He says, man, I broke rules on this one. Guys, you'll know when you break rules. It's okay to annotate it on the chart. It doesn't mean that you're a horrible person. It just means that you broke rules, that you got caught up in the moment, that you let the read and not the checklist take control. So, straight into a termination. Large triggers are a full bar away. Divergence from the fib, and Pete says, I'll go short at the mid-band. And guys, it takes a lot of risk to put your stop where the market shouldn't go. And the market said, you know what? Pete really is a nice guy. Let's give him this one. Let's give him the win. No areas inside of triggers. Let's give him the win and convince Pete that he should take this trade every time, because we're going to give him 2 or 3 of these, and then we're going to absolutely hang him out to dry more often than we don't, right? Pete knows what he did. And guys, I'm not the trade police. If you're going to get lucky, guys, I want you to make money. I want you to make money on the lucky trades, but I want you to realize that they are in fact lucky trades, that they are not rooted in advantage. Strong bottom, love it. Took a while, smalls got above the large, everything is screaming up. Pete doesn't take the trend trade into the fib because fibs can create bounces. Pete lets it clear with all that momentum, and off it goes. And with this look, guys, Pete knows that that fib is more likely to stop the market and create a bounce, and that's exactly what it does. And then he gets paid, and then he gets out with a loss of momentum. And man, this is perfection. When your momentum trade fails and the large chart is perfect, it's probably turning into a trend trade. And Pete didn't move his stops. He just left it where the market shouldn't go, and then he got paid. That's rock star status, Pete. Nicely done. And guys, I want you to remember, Pete has 10 years. 10 years with Nexgen. 10 years of momentum. 10 years of path. 10 years of chart reading. 10 years of mistakes and feedback. That's why he's so good at what he does. All right. Triggers are up. Jen, you're getting out of your annotations, right? 62. So we're right here. So the triggers are up. Weak side of the triggers, room back to the zone. Is that right? Guys, I'm going to encourage you, don't hold off on your annotations. Don't start saying, oh, I know what it was, right? Go through that process. Remind yourself why you took this trade. Triggers are up. It is very much on the weak side, and Jen took advantage of the news spike. The market pulls back to support, and I love this. Audio cutting in and out. All right, guys, I'll be right back. Hold on. Hold on. Reconnect. Education. Pop out. Can you guys hear me? No. All right. Can you guys hear me now? And guys, I noticed four different messages in Discord. I see the 4 right here, guys. I'll get them after class. If it's something pressing, I need you to post it in the room. Because it's not fair to the rest of the people in the room for me to go back and check private messages in the middle of a classroom. So Jen, up, weak side, room to trouble. Market pulls back, hits the zone, and you don't get the close on the correct side of the triggers. And I love this. You recognized it, and you took a $200 loss. You thought, oh gosh, I hope they don't go without me. That's what I think when I take the wrong entry. And guys, it gets me almost every time too. Small little loss. And then the correct entry, the one that closes on the correct side of the triggers, there's that screamer bar again, guys, because when it's right, it's right. She takes 2 off, right at trouble, because she's from the weak side, and probably went break even or protected herself, maybe behind that HVA line, and said, with all of this screaming up, I'm going to make a little extra money. And Jen, this is absolutely beautiful, $750 trade. And sometimes we don't get lucky. And you know what's awesome, Jen? Is that you took it on a 4 lot and lost, and it didn't change the dynamic of the trade. It didn't change that it was the right trade. It didn't change anything, and you got back in with that 4 lot and 750. So props to you. Great recognition of breaking your rule. You suffered a little bit for it, but then you got right back in the game and took the right trade. 2 triggers through. Pull back to the mid-band inside of triggers, and it works. It's a tough look. Tough look, Pete. And Jen, it's for you, not me. You don't have to. I can read your charts. But the reason that I'm doing it, especially for you guys that are now stepping into management, is I want you talking about to yourself, not to me, because obviously I'm not there, but I want you talking to yourself. And I want you saying, I'm on the weak side. These areas might hold. I have to be aware. And the more you type that out, the more in tune you are with your chart reads and what they mean to you. And it's a little thing for new users. Pete, directly into a termination, divergence from the termination. You do have the mid band. You do manage assertively. It's from a bad top, and once again, man, you're playing with fire a little bit there, just a little bit, but it's working out because of the momentum on the large chart. Guys, it's hard to stop this chart, and retests happen, and assertive management is mandatory. Nicely done. All right, Paul. 1 minute entry good. Why? 15-minute triggers down, transition clear, kept stop aggressive. So the triggers were down, right? The triggers were down, but you went long. You entered at 87.50, which is right about there. Down triggers, no momentum. But your small chart says up. Your small chart says up strong. Your small chart had the pullback. And you're just kind of hoping that these areas hold, right? Paul, termination that they tried 1, 2, 3, 4, 5 times. Termination, you get to the good side of stuff. Give yourself a fighting chance. Manage assertively because you know you're against triggers. Paul, I can't find anything wrong with this trade. It doesn't fit the KISS plan. The manage is assertive. The only thing that I might say, Paul, is because it's assertive, that HVA line is a great place to get paid. That HVA line at 92 is an awesome place to get paid. But when you have a termination, when everything's going your way, you took a shot. Calculated risk. That's your right. Triggers are still down, tried to go long again, and this time it just ran your ass over, right? You got away with one, decided you should get away with another, and it slaughtered you. Larger down, smalls aren't above them. There is no momentum trade. There is no trend trade, right? Big difference. Big difference. Guys, am I cutting in and out for everyone or just Pete? Can you guys hear me? We're good? Pablo's fine? All right, so Pete, you reboot this time. It's your turn. You guys ever have your coffee, don't drink it, gets cold, and guys, cold coffee is disgusting. So, guys, I love it when you get lucky. It's better to have advantages. And you forfeited every one of them, Paul, and you got exactly what we would expect with the forfeiture of every advantage on your chart. First trade, thought it was going to be a winner, but that's what I get for thinking. So, guys, if your large triggers are a full bar away and the mid band has been reached, the mid band is a termination. There's only 2 triggers through support. It's not a strong bottom. Pete, this is an avoided trade. All right, guys, I'll be right back. That's 2. Be right back. Be right back. Here I come. Alright guys, coming back. That usually helps. Hopefully it does. Hopefully it does. Let me get my screen back up. Alright, so guys, remember when I said that you're going to get lucky every now and then? And they're going to give you that luck, hoping that you continue to try to take those lucky trades? Here's the second example. Only 2 triggers through. Mid-band's a termination. Large triggers are a full bar away. Weak bottom. This goes against everything that medium probability trade stands for. And Pete gets slaughtered. And then Pete says, whoa, I made a mistake. I have odds favorable momentum from a bad bottom, from a termination. I'm going to jump in, write it down, and get it back. Nice recovery, Pete. Nice recovery. Avoidable losses. Avoidable losses, guys. I can't stress this enough. That $200 loss is $200 that he didn't get to collect on this trade, and it was avoidable. Great trading, great recovery, Pete. All right. Somebody that's not Pete. Odds favorable momentum. 3 triggers through. Strong bottom. Pull back to the area inside of triggers. Easy money. Who was this? Who was this? Nicely done. 3 triggers through. No divergence. Perfect entry. Great stop placement. Easy money. Organic. Outstanding. And the strong bottom just to add warm fuzzies. Guys, this is the KISS plan. You nailed it. 100%. I recognize this, guys. Boaz. Check this out. Odds favorable momentum. Clear path. Hey, Andy, man. Pull back to an area inside of triggers. Get paid. Don't give any back. Great job. Nicely done, Boaz. Perfect trend trade. Perfect trend trade. Not the best momentum. He even said not perfect. It is a clear path. There was the pullback to the area. And then Boaz, second lower divergence without momentum is an awesome, awesome exit condition. And guys, one of the things I'm going to encourage you to do, whether you're using the automated system or not, whether you're taking that system with the great entries or not, if you are a NinjaTrader user, let me find the announcement section. If you're a NinjaTrader user, guys, go watch this video. This is John Novak talking about small chart management, taking advantage, being a, hey, there's John Novak as we speak. Guys, if you are a NinjaTrader user, go watch this video 4 times. If you have the automated system, go watch this video 4 times. It is probably, John, I would say the pinnacle of your management videos. It is perfect. It is perfect. John, you wrote this a long time ago, so long ago you won't tell us when. Oh, it's actually a download. Good text file to read. I thought it was just a picture. Guys, when he posts stuff in, Boaz, does that make sense though? Not the best momentum. Second lower divergence is an awesome, awesome exit condition. Nicely done. And then what happens is I like the trade, right? It's a good look. It's entry at the areas, creates less risk, gives you more time to manage if that happens. Nicely done, Boaz. Great large chart. Small chart just showed you that change. All right, Miss Jen. Triggers up. Weak side. Small triggers roll, so no momentum trade. You get a close on the correct side of triggers. You buy after the close. You get paid right in front of trouble. And then you get paid on the next one, right at 09, right at the next level. Beautiful. Need to work out the profit target and stop loss better? I don't know. 140 on a first contract that's coming from an area, from the weak side. I love it. I think it's good management. Hey, good morning, Master B. Nice trade, Miss Jen. That was AMP, so you're learning it still? Right on. It's the same patterns, it's the same entries, it's the same stops. The only difference is it's easier to get your targets there, I think. And then this one was strong triggers, 3 triggers through, pull back to the area inside of triggers, and then must stop after divergence. It was very fast. Boaz, way to make a little something out of nothing there, because it did pull back lower once that divergence printed. Nice management, Boaz. Great trade, great taking advantage. They don't all win, but some great management. You're okay, Master V. Some great management goes a long way. Down, 3 triggers. You didn't take it on the way up because the small triggers were strong. You take it on the way down, and man, it just goes all the way to the fib. Great trade, Boaz. Very fast trade. Even with a couple losers, up over 700 on the day. That's outstanding. All right, there's our first round of pictures, guys. Great job, everybody. We'll see what I missed. But let's do the live chart reads real quick. So, S&P. Do I have strong triggers? Play along if you're brand new, guys. Do I have the advantage of momentum? We'll take the picture so nothing moves. Smalls are down. Large are not wide yet. Not the best look. There is space. So even if you say, yep, I've got momentum, price reached yellow 1-to-1s, absolutely no triggers through. Not my best chance of success. No clear path to the downside. Just have to wait a minute. Whoops. That's my untitled workspace. Nothing on that one. Let's get you to crude oil. Crude oil is absolutely putting on a clinic on termination conditions, aren't they? Price reaches Fibonacci resistance. No more long trades. And now we have weak triggers right at that same area of resistance. No long trades, no momentum. That's your chart read, guys. That's how fast it happens. If you don't read your large chart that fast, take a lot of pictures. Work on those very simple concepts. If you have those concepts down and you spend more than 5 or 6 minutes reading your large chart, chances are you're making up rules. All right. Trading view, we'll just do the NASDAQ on it, and I'll freeze it in the moment. My triggers are up. I'm in the transition side of the triggers, and I have no room to get back to trouble. Do you guys see it? They're up. They're transition. I've got no room. My rules say don't trade into that wall. Just don't do it. Let it break. Let it roll. Let it do anything, right? Trading into areas that have the potential to stop the market are more likely to pull money out of your account than they're not. That's it. And you're going to say, but it went up, right? And maybe it will. Maybe it won't. Maybe this will hold and the market will reverse and it'll drop 1,000 points. I don't know what the market's going to do. The only thing that I know is whether or not my rules are met. The only thing that I know is whether or not my rules were met. And it wasn't nothing. Victor, there's your outer band right there. They couldn't get back inside of the outer band. Do you see it? You don't see the outer band on the large chart? It's right there. That's it. Couldn't get through it. Couldn't push back down with those up triggers. That's exactly what it bounced off of. Now it's not a 1 minute area for entry, and there's still not a lot of room to get to trouble, but there was most certainly something there that created a reaction, that created a fight, that created sideways movement, and then they decided to go up with the trigger lines. Pretty cool, right? All right, so that's our first batch. Pete, enjoy the dog park, or let your dog enjoy the dog park. $10.09, $10.30, $10.25. All right, guys, next round of pictures. How we doing? You guys learning anything? I hope you're learning something. Do you guys that aren't posting in the room, I hope you're seeing that, guys, I give feedback on everything. I'll talk about the good, we'll talk about the bad, we'll talk about the advantages, we'll talk about the disadvantages, we'll talk about whether or not there was a way to do it better, whether there was a way to reduce risk, whether there was a way to find more profit, guys. We'll talk about all of it. All you have to do is post in the room and tell me what you see. I didn't say that, did I, Victor? You said that it was bouncing from nowhere. I said it was bouncing from an outer band. Do you see how there's a big difference between me saying the outer band is an area for entry and saying it's not an area on the small chart? My rules, the rules that I give you guys, the ones provided in the room every day, if you're following the KISS plan, buy or sell a close on the correct side of the triggers on a 1 minute mid-band zone or area. So Victor, just because it bounced doesn't mean that you had a trade. Does that make sense? Why are the rules written out that way? Because we did a lot of study to optimize your chances of success. Victor, does that mean that one day you won't incorporate it? I don't know. There it is right there, right? One day you may incorporate it. That's up to you. But it doesn't fit the plan. It's just me answering the question when you said it didn't bounce off anything. Well, I feel like it did. All right. Let me see where we're at. That was Andy Man. But I like it when you guys do that. And remember, guys, that your chart reads are not your rules. Your chart reads are what the indicators are telling you. Your chart read is letting you know if your rules are met. And one of the things your brain is going to do, mine anyway, is it's going to try to lean on the chart read rather than the rules. It's going to try to say things like, well, I don't have an area but, I don't have momentum but, I don't have a close on the correct side of the triggers but, and that's your right. But trading directly into resistance without any trigger lines through, even with momentum, works less than it wins. Does that make sense, everybody? Even from a strong bottom, there is zero difference between these two trades with the exception of this one had better momentum. He takes the entry, manages the trouble, gets out at more trouble. Take and manage, right? If you're going to break your rules, take and manage. If you're going to trade without advantages, take and manage. That's the John Novak battle cry. Take and manage. Good stuff, guys. Good stuff. Who's next? I recognize these. 15-minute up, strong side, clear path, and you just jump the fudge in and make a lot of money. $970. When everything is screaming and there's nothing in the way, Paul says, I'm going up with it. And that's exactly what you did. And you did it beautifully. And you got out, it looks like, right by that outer band. It's hard to argue. Does it fit rules? Not completely. But guys, if you are walking across the highway, you're not walking in front of a loaded down semi doing 100 miles an hour, right? You're not trying to go against it. You're going with it. And Paul, you did a great job of that. HVA breakout. There's no HVA line. Oh, John, let's not add trades that I don't have checklists for. So guys, John Novak is going to teach the room one day, and he's going to teach you all the HVA breakout trade. In about 3 weeks, because he doesn't know yet, I'm going to ask for a day off. All the momentum, 3 triggers through Boaz. It does pull back to the areas inside of triggers. You say you missed it, and I agree. It was a beautiful trade. And if you didn't catch the first one, it came back for you. And then with all that momentum and room to trouble, it's exactly what it did. Great job. And guys, even if you don't take the trade, it doesn't hurt to go back and annotate the one you didn't take, right? All you're doing is reinforcing these amazing rules. All right. Price left, strong triggers, room to trouble. Jen, you get in when it gets above the zone. And you take it right up to trouble from 84 to 91. On a 2-lot, that's $280 trade. You understand that there was only room to the 1-to-1s, and that's exactly where you got paid. This is not you? Oh, this is Sammy. Sorry, Jen. He's trying to mimic your annotations. Sammy, this is you, right? Perfect. Strong side, room to trouble. get in above trouble, get out of trouble with everything screaming that direction. I mean, to quote John Novak, hard to argue. Hard to argue all those advantages. And then Andy Man. Momentum here. Where did you get in? 38, 38. You pretty much had 4 triggers through. You take the momentum style entry, take the first one off at trouble because trouble can create bounces. Take the second one off just for the sake of taking profit, and let the third one run all the way to trouble. And Andy Man, you have found your groove. What a great job. Nicely done. And guys, that's all the pictures. And check it out. They stuttered and then broke. Stuttered and then broke. First time that trouble created a big push. Buyers took back over. Now they're above it. Triggers are up. Transition side of the triggers. Rules not meant for a momentum style trade because we're not strong side, not yet. We'll see if they push a little lower. They're back inside of the zone right now. And I don't think Andy's in here right now. Only for Andy. HVA breakout is when triggers are up. HVA area lines on a breakout, break up, past. It's a momentum long. One up, one down, trailing stop. So John, my understanding was that the HVA line needed to be above the HVA line of the bar that closes, that the close of that bar, the HVA bar, had to be above. And this is why I'm not teaching it. This is why I don't use it in my plan. So it didn't on this one, right? So the entry would be right here, the momentum after. This one breaks above by the pullback. Am I reading that correctly, John? There's your HVA line. There's your HVA close above. There's your pullback right to the area. That's your go. That's your momentum trade. Okay. So I can read a chart. There we go. Better annotation. The red bar is the HVA lines above the magenta. That's your entry. So the first arrow made you believe that it was the white bar. This one makes you think it was the white bar. But that's the actual entry. That's why I teach the room. John's too smart. He knows. Well, I know, John, but there's a lot of assumptive in there. HVA breakout is when triggers are up, HVA area lines up on a bar, break above past the magenta HVA. And then it points right to the bar that doesn't do it. Why you made the video. And guys, I love this, and I'm giving John a little crap because I love him. Clarity goes a long way in the room. Clarity goes a long way. Because what happens is when you're a new user, there's a lot of half-truths, and there's a lot of believing you understand the lesson when you really don't. And yeah, everyone doesn't know everything that John knows. Guys, coming and learning from John as a brand new user is, I always equate it to learning string theory from Einstein as a third grader. There's nobody in the world you could ever want to learn it from other than him, right? The best of the best. But Einstein is so freaking smart. How's he going to dumb it down for me? I don't know. All right. Andy, triggers are down. Strong side, below trouble. Market pulls all the way back to resistance. You show unbelievable restraint. Get in on the close below. And down it goes right to the HVA with the strong side. Right to the outer band. And you said you didn't take this one, but Andy V, that is the perfect trade, isn't it? It's the perfect trade. Nicely done. And sometimes you don't get it, right? Sometimes you don't get the trade, but man, if you go back and annotate it, Andy V, you're more likely to catch this trade next time. and I know you were doing something else, guys. You'll never catch a trade you're not at your computer for. That's not your money. That's somebody else's money that didn't have to go to the bathroom, that didn't need some toast, right? There was a better one shortly after. Well, I hope I see that picture. You guys see how they're struggling to get out of that zone? That your close still hasn't been on the correct side of the triggers? This would be the first bar with the potential to close on the correct side of the triggers. On the pull back to the area, with the triggers up, it's above trouble. That would be your entry. Stop below the zone that you're hoping holds. Maybe you're just looking to take profits at the outer band. Do you guys see how that patience, waiting, that's your first close above? Doesn't guarantee a winner. We're on the transition side. Claire, one thing you can do is click on your chart and hit F5 and reload it. See if they come back. Make sure that you're in Q1 exclamation point, not in QZ. That's a good one. Good spot for an HVA breakout, right? But there's no pink. It's just a trend trade. Market goes up. Triggers are up. Transition side. Entries above trouble on both charts. Since the triggers rolled, had to wait for a close on the correct side of the triggers. There it was. Stop can go below the zone that I'm hoping holds. And now we're just managing, right? Now we're just managing. They either come and get our stop because they want to go lower. I'm not in control of that. But what's changed? So far, my small triggers have rolled up in the direction of the trade. That feels pretty good. And yeah, Claire, make sure that you're not in NQZ 2025 from the roll of the contracts. Sometimes that'll change the zones a little bit. If you're doing partials from 1150, 1650 represents $100. You could take half off at $100, hold the other ones for the outer bands. Jen, you can, or Claire, you can also get with tech if you want. Term here on Ninja. This bar closed below here. Sell below the zone. So Jen, you went short. But you don't have, you're not. It's not a termination, you're above, right? Little aggressive. Odds favorable, momentum, everything is up. And it just didn't work out. You tried to be first and it didn't work out. I tried it, didn't work out, right? And now the triggers are rolling and now we're back below and you made 750. Great job. Jen made 750. Okay. Nicely done, I guess. There's your termination. You're trading two platforms, divergence prints, white bar pattern, opens below. Go. I like the quick profits, Jen. You just didn't have a lot. Yeah, it's a white bar trade. It definitely is. Getting in at 04, so you let it get below trouble, but you are directly in trouble here. You took the first shot, you took the best shot, you capitalized, you didn't hold and hope. Nicely done. I apologize. I thought that for some reason I saw those numbers backwards. That's it. That is anticipating the HVA line that ultimately prints. Using that pattern that we talked about earlier, guys, that highest concentration, that open below, more likely to push down. Nicely done, Jen. I apologize for the confusion on that one. All right, y'all, I'm going to take a few minutes. Another termination condition for the win. It's been a lot to look at. I love it, though. There's another termination condition for the win, guys. Small triggers down, odds favorable momentum, almost 3 triggers through, right? But if the market pulls back, there is one line inside of triggers where that market is most likely to bounce. Do you guys see it? All the momentum, room to trouble. We're a freckle away from 3 triggers through. If you got a reversal bar, there is one line inside of triggers where we'd anticipate that market to bounce. And there's no divergence potential. That's the perfect look. Let's see if they come get you. I'm going to take just a minute, guys, and then I'll be back. We're up to 7 on Discord. I'll get all those after class, I promise. Back in just a second. I believe I'm through all the pictures, which is cool. So, whoop. Now, wash, rinse, repeat. Strong bottom, triggers roll, strong triggers, pull back to the area inside of triggers, out of trouble. Nicely done, Master B. And what you took there, which is pretty cool, let me show you something. You took a trade. Let me see if I can find it. Well, I don't know where I found it. Never mind. You took a trade that Nexgen started teaching in 2004, Master B, that says when you get a termination and the small triggers roll, buy the pullback. And you did it beautifully. And just, man, great looking trade. Nicely done. Nicely done. VBH. Love the new people. You went short somewhere, and you were making money in that one, and I love that. When you say why is 34.5 showing different than the small screen? Because these are two very different time frames, VBH. 34.5 is a reference to the bar structure. 13.2 is reference to the bar structure. So this is a big chart. Oh, it's showing different price. 12.25, 12.25. 91.50, 91.50. I'm seeing the same prices everywhere. Will you take the same picture and point out where you think the challenge is? I see the same prices everywhere. I see the same entry. I see price trading in the exact same location. I see your target at the exact same spot. What am I missing? Oh, in your P&L window. I'm sorry, I missed that. Okay, so VBH, I'll show you. So what you're seeing is, if you go to Properties in ChartTrader, right-click, go to Properties, you can have it show in currency. You can have it show in percent, pips, points, ticks. So what I believe you have is points. And we'll show it in here. And I'll apply it. And then over here, I believe I have it in currency. So I'm in Simulator. So if I sell the market, over here it's going to show in points. Over here it's going to show in money. And when I close that out, over here it's going to show in money. Whoops. And over here, what you're showing is P&L is showing cash, not money. But that's all it is you've got one chart showing in points, and you've got one chart showing in cash. So 20.75 points is $415. Or ticks. You've got it showing in ticks. Does that make sense? Yeah, or if it bugs you, change it for sure. If it doesn't, just leave it. I typically don't even keep my large chart trader up. I'm managing on a small chart, so good question. Sorry I missed it at first. Miss Cindy, lower divergence, everything down, strong triggers, pull back to a mid-band inside of triggers, and just easy money right at the fib. Nice trade, Miss Cindy. John Novak, can you do that? Because that's perfect. And did the automated system give you the entry? So you're using the automated system for entry and then using discretion for management? Beautiful, Miss Cindy. John, this is like prize pupil for you right here, Miss Cindy. And then John went short when it gets below the mid band with all the momentum. Market pulls back, stop keeps them safe, and now it's going down. We'll see what happens. Good stuff, John. A little more discretion. Guys, there we go with only 2 triggers through. Do you see what the market did? Even though it looked perfect, with only 2 triggers through, guys, that's the one that doesn't work quite as often. Good stuff. So if you're a KISS plan user, you didn't have a trade. There's a reason I didn't activate an order there. Well, except for the little example. Termination never gets below the 1-to-1s. We decided we didn't have a clear path. And sure enough, guys, those triggers tell the story. When all of your triggers are above support, you see these bounces. And now You've got 3 triggers below a divergence high, and look what your small chart's doing. It's giving you fits. All right, we got about 30 minutes, guys. What do you want to talk about? I've gone through everything. Did the trading view management help a little bit? And guys, I dropped that PowerPoint in the room. Was that helpful, trading view users? Just initial stops, and then once that initial stop is in place, finding ways to manage using pivots, stuff like that. Claire, did you get your zones back? Did you try to reload? Guys, all you have to do is tell me what you need. And Alan, that was just going from yours. I don't feel like I've done it enough. So we're there. Holy smokes, John. I'm going to read this because there's no pictures to look at. John's text. Nexgen will supply the Fibonacci-based software and trading rules along with the coaching that will increase your odds of winning more than losing. After choosing Nexgen to be your technical analysis partner, do not worry about how long it will take you to become a profitable trader. Worry about the process of learning. Remember, simulation of your trading plan is not trading. It is practicing the movements of trading until they are so ingrained in your muscle memory that you no longer have to think about trading your plan consciously. This will be your first goal. Repetition creates recognition. Your second goal is to simulate it. 25 of the same trade setups, trend trades, continuation if you wish. Follow your plan without deviation, distracting thoughts, or hesitation to act. Writing down using screencast picture and labeling your charts. What you could, should have done better. Getting feedback from the Nexgen staff. Everyone is different. It will take time to become unconsciously consistent at entering and exiting your trades. The more times you complete 25 of the exact same trades on simulation, posting charts for feedback in the room, and following your plan without deviation, distracting thoughts, or hesitation to act, the closer you will be to becoming a profitable trader. You will not have to win all 25 trades. If you win 15 of them and lose 10, you should still be a winning trader if you manage the trades correctly. Each time you repeat the same 25 trades and successfully win overall, you take the chance to trade real money, making sure you can follow your plan without deviation, distracting thoughts, or hesitation to act. When you trade real money, if you fail to follow your plan and end up losing money, you are not a professional profitable trader yet. Do not despair and do not do much financial damage. Go back and take another 25 trades on the simulator. Most traders will return to the simulator several times. This is expected and very common. You are not losing, you are learning. There is a difference. Becoming great at any profession has a cost. Your cost will be small losing runs with live money. This is why the micro contracts are a good way to test your plan. Finally, you will learn to follow your plan and make money most of the time. Then you can call yourself a professional profitable trader. Typically, after most traders achieve successful mindset and the ability to no longer have to think about trading the rules consciously, they never lose it. Nexgen provides analysis, rules, coaching. Only you yourself will be responsible for becoming the profitable trader. Nexgen is here to help, but you must do your part. John, that was brilliant. That was from 2008 after working with Mark Douglas for a year. That's awesome, John. That's the keys to the kingdom right there. Post your picks, use the prop firm versus real money, and don't be afraid of simulator. I think that was very impactful. Don't be afraid of simulator, guys. It's not a failure. You're just building that muscle memory. It's the batting cages, right? It's the driving range. Not losing, you're learning. That's a good one too. I've done a lot of learning in my journey. I've done a lot of learning. And guys, it all goes back to, and we visit this one a lot, and this is Mark Douglas ideas as well. When you stop expecting to win every trade, you're going to start winning most of your trades. When you don't care about the results, you care about the execution of the method. Guys, the method can be proven to win more than it loses. And Mark Douglas goes back to talking about probabilities and the idea that if you have a weighted coin and you can prove that that coin will land on heads 80% of the time, would you ever bet tails as a prudent investor? If you can prove that your coin will land on heads 80% of the time, there's no reason to ever bet tails. You just bet heads every time with the understanding that there will be times when it lands on tails, but more often than not, you have the potential to win that coin flip. So trading is very much like that, guys, and it's trading consistently. It's not deviating from the plan. All professionals have a simulation phase. That does not work on sports betting, by the way. Well, that's gambling, where you have no control of the input, so you can't create logical expectations on the output. It is a profession. What is it? Was it Tombstone, where Doc Holliday says that gambling is not a profession? Or something like that. So, I don't know. I like that, John. I think that is pretty cool, and what a great thing to post in the room, because there's nobody in this room that hasn't taken a loss and had it shake their confidence a little bit. I'm one of them. I've one of them. Let it be mechanical, guys. Let it be pragmatic. Let it be very if-then. And here's the cool thing, is that if you're like, you know what, I'd rather just pay somebody to give me the best entries. You can pay Nexgen now. I'll bring up my auto trader real quick, guys. I don't know what it's done this morning. I think it made me $3,600 yesterday. I haven't had it turned on because I try not to show it too much in the room, guys. But the auto trader, John Novak did most of the heavy lifting, but we worked together. It is honest to goodness based on the absolute best entry that you could ever take. It is based on having the advantage of momentum, either a clear path or the potential to break, coming from a good spot. And here's Cindy's right here. And look at where her system put her in. Right at a mid-band, inside of triggers. Guys, the Nexgen automated system is something that we work really hard on. And you can take it and use a little bit of discretion and find fantastic results. Just like Cindy did. She got out of trouble. She didn't hope, she didn't wish, she didn't want, she didn't pray. She said, hey, there's my trouble. Let me get paid. Fibonacci stops the market. That's an option, guys. But then you're going to go through the process of learning to manage. And I'm trying to get John to do like a super class on it. I still think we should have a seminar where you guys all show up at a hotel in Florida and we have a great time and go play golf when we're done. I'm going to enable my strategy real quick. You like that idea, Marky Mark? I think it's a great idea. And once I enable it, guys, you can even scroll back and you can see where the market gave entries. Beautiful one right there, right? Couple more, beautiful. I'm looking. And remember when I said 90% of your day is waiting? Do you guys notice how the perfect entries, there's a lot of waiting. But if you wait, good stuff. And John says when the programmer is back, we'll program in small chart management for the big chart system. Programmers take long vacations. But guys, it's everything that we teach. Everything that we look for. And I think it's brilliant that in times of consolidation and no clear path, the software happens to be doing nothing. Thought we were talking 15 minutes, 20 minutes. Hold on. What we talking 15 minutes, 20 minutes? I don't know. Oh, yeah. 15, 20 minutes. Guys, you might wait hours. You might wait hours for a trade. But when it's the right trade, life is good. When it has all the advantages, Life is good. When it's not into trouble, life is good, guys. Trading doesn't have to be stressful. It really doesn't. Really doesn't. What would you guys like to talk about? John, thanks for stopping in. I love it, guys. How many... Not at prime time unless we're waiting on a red house? I don't know what that means, Master B. Oh, news. I got you. Yeah, when the market's moving, it moves, doesn't it? Guys, NASDAQ probably gives 15 to 20 opportunities a day. I firmly believe that. NASDAQ probably gives 15 to 20 opportunities a day that fit the rules, that fit the plans. Um, can you wait for those opportunities? That's the question. Can you sit on your hands and do nothing until the opportunities present themselves? Did you guys know that with the triggers up from the weak side of the triggers, with a close on the correct side of the triggers and room to trouble, that's just a trend trade right there? That's just a trend trade. Right up to trouble. Did anybody catch that? You will see an opportunity faster than traveling to work. I like that, Master B. I don't know. I'm about 20 steps from work, from my kitchen. But there are stairs involved, so can't wait to get back to Texas, get rid of those stairs. I'm too old for stairs. All right,